If you are a serious investor and want to put your stock picking skills to the test, I have something new and exciting for you. I've partnered with a company called Compoundle where you can analyze certain events in the market at certain times, and then you ultimately have to try and make a decision and see what the outcomes are at present value. So how does it work? Well, the rules are pretty simple. You are going to get a case in this moment, January 2014. You're going to get a series of various financial information. You'll even get what industry it operates in, but you can see things like advanced metrics here, as well as the stock movement over the course of history for a certain period of time. And from there, you have to make a decision about whether to pass on the stock, you can short it, or you can invest. On top of that, you get to start out with a certain amount of money. In this case, you begin with $1,000 and you have to dictate how much of your portfolio you want to invest in that company. When you do, you can then make an investment and you will see how it performs over that time. Do you gain money? Do you lose money? Was it a bad decision? Do you have to start from ground zero again? You name it. That's how we see it. And from there, there's a ranking system, a leaderboard where you can see that how much money you've generated on a regular basis over time. Now, Compoundle is a daily game, so if you do lose all your money, you start back at ground zero. The next day, you're going to get $1,000 to begin with. But for those who continue to make savvy investments, you can see this thing grow and measure yourself against other investors to determine who is the best stock picker in the world. So with that, I am myself going to put this game to the test. Compoundle has sent me a few of their various case studies. I'm going to share this information. This is brand new. I don't know the outcome. I don't know whether it's a good investment or not, but I'm going to walk you through my approach to analyzing investments and then make a decision, and we are going to find out whether I actually know what I'm talking about or not. So with that, this is all financial information here. We're going to see that this company in January 2014 had a market cap of $366 billion. It had a price to earnings of 29. It operates in the technology industry. EPS CAGR of 13%, pretty solid. Debt to equity only 0.06. So very solid numbers. Now moving on to the advanced metrics, because it's not just enough to look at those things. You can see a gross margin of 57%, an operating margin of 23%, a net profit margin of 22%, return on equity of 16%, revenue over a 3-year period growing at 27%, net profit growing at 15%, shareholder equity growing at 24%, free cash flow growing at 17%. All really strong numbers for a 3-year span. You know, these are good growth metrics, and we're seeing from an operational standpoint that they're generating healthy margins as well as a solid return on equity. For most standpoint, I would say this is a really good business. Now, I don't put as much factoring into the stock movement, but it is good to see where it is relative to where its performance has been over time. And more than anything, what you're seeing here is that from 2008 up to January 2014, you're seeing decent returns. Does this mean that the stock's overvalued and that its best days are behind it? Not necessarily. That really comes down to where its current event is, how fundamentally strong it is, and from what we're seeing, it looks like it's in a pretty good position as of 2014. Now, a potential area where I'm not necessarily sold is the price to earnings is at 29 right now. That's not terrible. It's not extremely overvalued, but it's definitely pushing above the long-term average, which for the S&P 500 is a PE of 17. So slightly overvalued, but given it's in the technology sector, this is usually justifiable. They typically have higher PEs because they're growing so fast. And for the most part, things look pretty good. So as I said, the next step is to come to a decision. And on a daily basis, you will make these very same decisions as I am making today. And it's time to decide whether this stock is worth it. So looking at it from a high level standpoint, we're seeing good fundamentals. We're seeing a reasonable price in the technology sector. The market cap right now is already $367 billion of January 2014. That's pretty good. I mean, it's a good business. You know what? Based on everything I'm looking at, I'm going to say that we're going to invest about 40% of our portfolio in this one stock. And again, you could short it. You could say, hey, I don't think this is going up. You could even just pass and not risk any money. These are the decisions that everyday investors make all the time. and it is up to you to determine what you think the best course of action is. In this case, I like what I'm seeing. I'm seeing strong fundamentals. I'm seeing a reasonable price performance over the long run here, and the valuation's not too crazy. So, as I said, now we click to see if it invests, and we can see how the asset has performed in that time. And guess what, people? We just made $4,000. So if you invested back in 2014 into Alphabet at that time, well, guess what? You had a total percentage return of 1,044%. On an annual basis, that's 22% per year, and a total net earnings of $4,176. So as I said, comes down to fundamentals. A lot of the time, even if you choose to overpay, and in this case, like I was looking at Google's PE and I was saying, ooh, like 29 is not necessarily ideal, but it's a pretty decent price. So, we're going to take that chance. Let's take that risk. And here in this case, it was a pretty good bet, I would say. 1,000% return in just 12 years time, pretty darn good. And we've talked about Google before. I actually am a shareholder and invested in 2022. Boy, I wish I invested in 2014, but it is what it is. Now the question is it a good investment still today? As you can see here, Google's revenue over a 9-year period has grown 18%, net profit at 24%, book value at 13%, free cash flow at 12%. So all really solid numbers. The company generated in 2025 $403 billion of revenue, $132 billion in profit. It has $415 billion in book value and free cash flow of $73 billion in its last year. Return on invested capital is at 27% over a 5-year average. Same thing with net profit margin at 27% there. And overall, its long-term growth rate's at 14%. I like all things Google. Now, the only problem today versus back in 2014 is that the company currently has a market cap of $4 trillion, and I think the Google's worth $1.3 trillion. So even though it's a really, really strong business, I would actually probably more likely pass today, and with the caveat that I already own shares and have owned shares since 2022. But compared to here, looking at what's on Compoundle, I'm seeing that 2014 was a phenomenal time. Everything looked like it. And even today, you could probably see the same thing. Now we can see how we stack up on the measuring board. And here we are now at the top. Compared to Greg, we got about $2,000 of extra cash. You can measure yourself on this leaderboard too. You can also see how the graph has performed and overall check it out. But this is a great one. You can share it with friends here. Number one, first off the bat, first time checking out Compoundle, we got a dub. If you want to play it as well, go to the link in the bio and also make sure you like, comment, subscribe here to help grow the channel. But this is definitely worth it for those who want to conceptually understand what it takes to make long-term investments, whether it's a good decision based on the information at the time, and then see how it pays out. Because not only do you have to decide whether you want to invest short or pass, but how much do you want to invest? Do you want to make this 50% of your portfolio? Do you want to just reduce it down to 5%? All those factors play off into your decisions as an investor and your overall success when it's all said and done. But with that, definitely go check out Compoundle, link in the bio, and make sure to let me know what you think of it.